Let me ask you something. When was the last time you felt like you could breathe? Not the kind of breathing where you're just surviving. Not the shallow, anxious breathing you do when you're checking your bank account on the 28th of the month, praying the numbers make sense. I'm talking about the kind of breathing where you wake up, look at your finances, and think, I'm going to be okay. For most people, that moment never comes. Not at $10,000 in savings, not at $20,000, not even at $30,000. It comes at $50,000. And here's what nobody tells you. Getting to $50,000 is harder than getting from $50,000 to $500,000. I know that sounds insane. You're probably thinking, Julian, that's 10 times the amount. How is that easier? But it is. And by the end of this video, you're going to understand why $50,000 isn't just a number. It's a threshold, a psychological break point, the moment your brain stops fighting for survival and starts building for the future. My name is Julian Banks, and today we're going to break down the physics, the psychology, and the 2026 reality of why $50,000 is the hardest and most important number you'll ever make. This is the blueprint. Let's start with something most people don't understand. Money has momentum. Not metaphorical momentum, actual, measurable momentum. When you have $0 in savings, your momentum is zero. Every dollar you earn goes directly to survival, rent, food, transportation, utilities. There's no acceleration, no compounding, no leverage. You're pushing a boulder up a hill with nothing but your own two hands. Now imagine you have $1,000 saved. That's better, but not by much. At 5%, $1,000 earns you $50 a year. That's $4.16 a month. You can't even buy 2 coffees with that. Your momentum is still effectively zero. Let's go to $10,000. Now we're getting somewhere. At 5%, that's $500 a year, about $42 a month. That covers maybe your phone bill, maybe. You're still pushing the boulder, and the hill is still steep. But then something changes. You hit $50,000. At 5%, $50,000 generates $2,500 a year. That's $208 a month. Now, let me ask you, what does $208 a month mean to you? For some people, that's rent in a low-cost city. For others, it's a car payment. For most, it's the difference between I can handle an emergency and I'm one flat tire away from financial collapse. This is the physics. At $50,000, your money starts to do something it couldn't do before. It starts working. Not hard, not enough to replace your income, but enough to cover the little disasters that used to derail you. Your car breaks down, your money handles it. Your laptop dies, your money handles it. You need to take a day off for a family emergency, your money handles it. This is what I call crossing the momentum threshold. Before $50,000, you're the only engine. You're the one generating all the force. Every financial decision is a trade-off. Every expense is a negotiation with your future self. But at $50,000, you have a second engine. A small one, but it's there. And it's compounding. Here's the math that changes everything. Let's say you have $50,000 and you add $500 a month. Just $500. That's aggressive, but not impossible for someone making $60K to $70,000 a year. Year 1, $50,000 to $58,125 with 5% return. Year 2, $58,125 to $66,856. Year 3, $66,856 to $76,249. Year 4, $76,249 to $86,361. Year 5, $86,361 to $97,254.
In 5 years, you're almost at $100,000, and you didn't have to push as hard in year 5 as you did in year 1 because your money was doing some of the work. Now, let's rewind. Let's say you're starting from $0 and you save $500 a month. Year 1, 0 to $6,150 with 5% return. Year 2, $6,150 to $12,608. Year 3, $12,608 to $19,388. Year 4, $19,388 to $26,508. Year 5, $26,508 to $33,983. After 5 years of the exact same effort, you're at $33,983. You're not even at $50,000 yet. And here's the brutal part. Those 5 years felt harder because you had no momentum. Every dollar you saved was a dollar you fought for. There was no compounding helping you, no returns covering your mistakes. This is why $50,000 is the hardest number you'll ever make, because you have to make it alone.
Now let's talk about what's happening inside your brain, because this isn't just about math, it's about psychology. There's a concept in behavioral economics called scarcity mindset. When you're operating in scarcity, your brain is in constant survival mode. You're not thinking about building wealth, you're thinking about not losing what little you have. You don't invest in opportunities, you hoard cash. You don't take calculated risks, you avoid risks entirely. You don't think long-term, you think paycheck to paycheck. And the thing is, this isn't a character flaw. This is biology. Your brain is doing exactly what it's designed to do, protect you. But here's the problem. Survival mode is expensive. When you're in survival mode, you make decisions that cost you money in the long run. You don't have $500 for preventive dental care, so you end up spending $3,000 on an emergency root canal. You can't afford to buy in bulk, so you pay a premium on groceries every single week. You miss out on a 401k match because you can't afford to contribute, so you leave $2,000 to $3,000 a year on the table. Survival mode traps you in a cycle of expensive decisions, and you can't think your way out of it. You can't just be more disciplined or make better choices. You need capital. And that capital threshold for most people is $50,000. Here's why. At $50,000, your brain begins to shift. You're no longer asking, can I survive this month? You're asking, what can I build? This is what I call the builder brain. The builder brain operates differently. It sees opportunities instead of threats. It invests in assets instead of hoarding cash. It plans for decades, not days. And here's the critical part. You can't force this shift. You can't just decide to think like a builder when you have $5,000 in the bank and 3 months of expenses looming over you. You need the financial foundation first. At $50,000, that foundation is solid enough for your brain to relax. You're not rich, you're not financially independent, but you're safe. And safety is the unlock. Let me give you a real-world example. Imagine 2 people. Both make $70,000 a year. Person A has $5,000 in savings. Person B has $50,000 in savings. They both get the same job offer, a startup opportunity with slightly lower pay but significant equity upside. Person A says no, they can't afford the risk. What if the startup fails? What if they need that extra $5,000 a year to cover emergencies? Person B says yes, they have a cushion. They can afford to bet on themselves. 5 years later, the startup exits. Person B makes $200,000 from their equity. Person A is still at the same company, making incremental raises. Same talent, same opportunity, different outcomes, because Person B had crossed the $50,000 threshold. This is the survival mode exit. And it's not just about job decisions, it's about everything. Person A doesn't negotiate their salary aggressively because they're afraid of losing the offer.
Person B negotiates hard because they know they can survive a few extra weeks of job searching if it doesn't work out. Person A stays in a bad relationship longer because they can't afford to move out. Person B has the financial freedom to leave when they need to. Person A skips the $500 certification course that could boost their income because it feels too risky. Person B invests in themselves because they know the ROI is worth it. This is what $50,000 buys you. Not luxury, not status, freedom to build.
Now let's bring this into 2026. Because here's the harsh reality. $50,000 today is not the same as $50,000 10 years ago. In 2015, $50,000 in savings could cover a full year of expenses for a single person in most mid-tier cities. In 2026, it covers about 6 to 8 months. Why? Because of the permanent level shock we talked about in the last video. Between 2023 and 2025, inflation spiked, prices reset, and they never came back down. Your rent didn't drop, your car insurance didn't drop, your grocery bill didn't drop. The baseline cost of living is now 30 to 40% higher than it was in 2020. So when I say $50,000 is the hardest number you'll ever make, I'm also saying in 2026, $50,000 is the new $20,000. It's the minimum threshold for psychological safety, not comfort, not wealth, safety. And here's where it gets even more complicated. AI-driven inflation is making it harder to reach that threshold. Remember the last video? We talked about how big tech's data center boom is driving up energy costs for everyone. Your electric bill is higher. Your rent is higher because landlords are passing on utility costs. Your transportation is higher because fuel and EV charging are both up. All of this is happening while wages are stagnant for most middle-income workers. So you're trying to save $50,000 in an environment where every dollar is worth less and every expense is climbing. It's like trying to fill a bucket with a hole in the bottom. But here's the good news. Once you hit $50,000, the game changes, because now you can start deploying that capital into assets that outpace inflation. Remember the Family A versus Family B example from the last video? Family A, $50,000 in cash earning 4.5%. Family B, $50,000 deployed in private credit, real estate debt, and alternatives earning 8 to 12%. After 5 years, Family A has about $61,000. Family B has about $88,000. That's a $27,000 gap from the same starting point. The difference? Family B crossed the threshold and started playing the real game. Now, if you're watching this and you're thinking, Julian, I'm nowhere near $50,000. This feels impossible. I get it. But here's what I need you to understand. The path to $50,000 is a grind. There's no way around that. You're going to have to make sacrifices. You're going to have to delay gratification. You're going to have to say no to things that feel good in the moment so you can say yes to the future you're building. But the alternative is worse. The alternative is spending the next 10 years in survival mode, wondering why you're working so hard and still feeling broke. So let me give you a framework. If you're starting from $0, here's the realistic path to $50,000 in 2026. Year 1 to 2, build the base. Save $500 to $800 a month. Cut the expenses that don't matter. Optimize the big 3, housing, transportation, food. Year 3 to 4, increase income. This is where you need to get aggressive. Side hustle, negotiate your salary, upskill. Your savings rate is capped by your income, so increase your income. Year 5, cross the threshold. By year 5, if you've been disciplined, you should be at or near $50,000, and then everything changes. If you're already past $50,000, here's what you need to do. Stop treating it like a finish line. It's not. It's the starting line. Deploy that capital. Get it out of cash. Put it into assets that work harder than you do. Private credit, real estate debt, index funds with dividends reinvested. Anything that compounds above inflation. Because in 2026, sitting on $50,000 in a savings account is like sitting on ice. It's melting.
Slowly, but it's melting.
Let's bring this full circle. You started this video wondering why $50,000 is the hardest number you'll ever make. Now you know. It's hard because you have to make it without momentum. It's hard because your brain is fighting you the entire way. It's hard because the economic environment in 2026 is working against you. But here's the truth that changes everything. Once you cross $50,000, you're not the same person anymore. You're not just wealthier, you're different. Your risk tolerance changes, your decision-making changes, your confidence changes. You stop seeing the world as a place where things happen to you, and you start seeing it as a place where you make things happen. This is the psychological advantage, and it's worth more than the $50,000 itself. Because once you've proven to yourself that you can build capital from nothing, you know you can do it again. You're no longer afraid of starting over. You're no longer paralyzed by setbacks. You have the most valuable asset in the world, belief in your own ability to build. So, here's my challenge to you. If you're not at $50,000 yet, make that your singular focus for the next 2 to 3 years. Not $100,000, not financial independence, not early retirement. $50,000. That's the milestone that unlocks everything else. And if you're already past $50,000, don't waste it. Deploy it. Multiply it. Use the momentum you've built to accelerate even faster. Because in 2026, the gap between the people who understand this and the people who don't is widening every single day. The question is, which side are you going to be on? If this video gave you clarity, subscribe. Drop a comment and tell me where you are on the journey to $50,000, and share this with someone who needs to hear it. This is Julian Banks, and this is The Blueprint.